Mark Kenney is CEO of CAPREIT, one of Canada's largest private market residential real estate companies. Thanks for being with us, Mark. Appreciate it.
And thanks for having me, Amanda.
So last time we talked, you had kind of a sense of what April was going to look like. So I actually just want to get a snapshot of how it felt across your, 57,000 units for May. How did the percentage of those who could pay look?
It's a very similar picture in May as it was in April. I think it's the feedback predominantly throughout the whole portfolio is that the support from the federal government, the CERB payments in particular, are really being helpful. But that doesn't take away from the fact that there's a lot of Canadian families that are impacted here. You know, I think I said on the last call, we typically see less than 0.5% of our people in default. For CAPREIT, it's always been 0.35 in the last decade. And it's several percentage points, which from an investment point of view is fine, but from a Canadian home impact, it's quite concerning.
And I know you've been clear all along that there were efforts that you have undertaken on not just the safety of your tenants, inside buildings, but also you've got a lot of employees too working across your buildings. How did that change? You just reported your numbers, so as we go to what the quarter looked like, how did your costs change because of COVID?
Well, it's not really a change in cost, it's a movement of cost. So clearly in the pandemic, normal work can't proceed, but the work is going to have to be done at some point. So a lot is just pushed off to the future. I think the change in cost is going to basically come from an area where we're just able to be more efficient. The availability of suppliers, the pressure on costs will come. I think we'll see a more competitive environment, which might be helpful. But right now, I wouldn't read too much into trend at all.
And I mean, it's early in terms of just how long we could see a protracted downturn. Do you have previous recessions to kind of mark against to say, what happens to occupancy, what happens to delinquencies? I mean, is there sort of benchmarks you can use to sort of try to understand what could happen to the business as we go forward? Given, and I say that knowing, Mark, that none of us really knows what's going to happen to the economy as we go forward.
Well, it's my first pandemic. But it's certainly not my first bad economic cycle. And I've been a participant in multifamily in several really bad economic cycles. And what we know in all of these cases is that apartments do well in uncertain economic times. When people are uncertain about investing in the real estate market or have lost the capital to be an investor in the real estate market, they will go to rental. And so this we know from history. And I think maybe we talked last time about what happened south of the border when the housing collapse happened. Mm-hmm. You saw a very strong rental. So I'm very confident that rental is going to do well in uncertain or disrupted economic times. We may not have the same mark-to-market rents as we were seeing pre-pandemic in a highly heated economy, but we will see a demand there. There's no question.
I mean, obviously, the ability to pay out distributions is something that this entire space has been under focus for. Lots of investor concern. We've seen many REITs kind of moving to reassure that distributions are safe. Give us a sense of kind of your feeling of how safe they can be in uncertain times.
Well, distributions are to a large extent highly driven by payout ratio for starters, and CAPREIT's been driving its payout ratio well down into the 60% range. So we have a lot of movement before we even start talking about distribution threat. But more importantly, our earnings situation is not under pressure. In fact, I think I said to you last time, Amanda, we could have a very, very strong second quarter, and that isn't based on business fundamentals. That will be based on the deferral of expenses, for example. But we're not seeing difficulty in our business. In fact, we're seeing extremely favorable things. We just did 10-year debt at 1.57%. that's coming off mortgage rates, 10-year money of 3.4%. So there's tremendous opportunity in the financing of the business. There are a lot of other synergies to the business, but CAPREIT in particular, along with a lot of the other apartment REITs, are in a very, very strong economic position.
And you are global, just in terms of, the diversification that gives you across different jurisdictions that will recover in different ways. So you'll actually have a really interesting snapshot, I think, of how the world looks coming out of this. But does it also give you lots of opportunity? To your point, you've got financing flexibility. Is this a time of growth for you?
Well, it could very well be. We're in the Netherlands, as you touched on. We're in Ireland. We're in Canada. We've been in the U.S. The demand for a platform that can work rental in this kind of environment will be very interesting. For example, we went to Ireland in the first place because they were busted condominium projects. They were never intended to be rental property, but were not viable given what had happened over there in a decade ago. But you could see that happen again. And CAPREIT's perfectly positioned to move its platform into high value opportunities. So it's a wait and see. It's very, very early stages still. I'm still very hopeful we'll see an end to this sooner than later.
We talked to David Rosenberg, who used the stagflation word. Is there a word that is worse for you in your industry than that one? There isn't a... The word that has me most concerned is really a couple of words. It's Canadian families. Like we like to talk about the business itself, but there's a lot of Canadian families that are highly impacted here, and housing is at the top of Canadian family impact. So I think I would actually applaud all levels of government for response, but particularly the feds for acting quickly. But sustaining incomes for Canadian families is critical. And then what happens on the other side of this? Clearly the pace that we're at is not, we can't do it forever, but getting this economy going again is going to be key to seeing families protected. And we have seen, Mark, some tensions between, landlords and tenants. And you and I have talked in the past. The vast majority of landlords are not big publicly traded entities. They're individuals with a few properties. What would your message be when you're thinking about those families? I mean, does there need to be a kind of a spirit of cooperation out there to get us all through this?
Yeah, well, there's a really important clarification here. Some of this rent strike business you've been hearing about is un-Canadian, it's undemocratic, and it's completely against what we believe in as Canadians. And what I mean by that is that just because there's a pandemic on doesn't mean you don't pay your rent. If your income isn't disrupted, then what's the entitlement to not pay rent? That attention and support needs to be reserved for families that are economically impacted. And I am extremely passionate about helping people in need. I am disgusted by behavior of those that don't have an economic need, that feel an entitlement. And the whole idea of protesting business in general is just against everything that we believe in Canada, in my view. So it's to be seen. Helping Canadians in need is the most important message that we need to get out there.
All right, but you haven't seen any particular pushback among your renters? It sounds as though your percentage of pay is still pretty high.
No, at CAPREIT, we haven't seen that, no.
Yeah. All right, Mark Kenney, great to have you with us. Appreciate your time today. Mark Kenney is the CEO of CAPREIT.